Ever wondered what an ETF is and how it might benefit your financial future? Well, prepare yourself for a concise explanation of exchange-traded funds. ETFs are a type of investment fund that is traded on stock exchanges, much like individual stocks. While similar to mutual funds in certain ways, a key difference lies in their trading pattern. ETF shares are bought and sold at the market price, which can be higher or lower than the net asset value. A unique feature of ETFs is the ability to buy and sell a basket of assets, such as stocks or bonds, without having to purchase each individual asset. This allows for a diversification of your investment portfolio, reducing risk exposure. Unlike mutual funds that require a substantial investment, ETFs offer this diversification at a lower cost, making them accessible to more investors. ETFs, like all investment products, carry risks. The value of an ETF can fluctuate based on the assets it holds, meaning there's potential for profit or loss. Also, an ETF is designed to track the value of an asset or index, but the tracking may not always be perfect, which could impact returns. The key is understanding the nuances of ETFs and aligning them with your investment objectives. Be aware that ETFs can track the value of an asset or index, but there's no guarantee of accuracy. This exploration of ETFs, we hope, has equipped you with the knowledge to make informed decisions about your financial future. Chapter 2. The benchmark, S&P 500 now, onto the S&P 500. As a central player in the financial world, its popularity is dictated by its complete representation of the American stock market. This index is constructed to assess the performance of 500 key companies in the United States. The S&P 500 is more than a numeric representation. It is recognized globally as a premier equity index, reflecting the broad and diverse sectors of the U.S. stock market. Its design employs a system known as capitalization weighting, ensuring larger companies hold greater influence over the index's value, making it a dynamic tool, reflecting the shifting dynamics of the stock market. Beyond being a gauge, the S&P 500 is an instrument of insight for investors, aiding in the identification of market trends and enabling informed decisions. It offers a holistic view of the market, highlighting potential opportunities and threats. By tracking the companies with the highest market capitalization, it offers risk management solutions and allows investors to compare their portfolio's performance against the broader market. This index is not just a numerical statistic, but a reflection of the economy's pulse, shaping investment strategies and serving as a reliable reference point. Now that's a lot to pack in one index. The S&P 500 is indeed a useful tool for investors looking to benchmark their own portfolios, or to invest in products that track the index. Chapter 3. The Tech-Heavy, NASDAQ 100. The NASDAQ 100 is an intriguing part of the financial market, offering an in-depth view of technology. It includes 100 large national and international non-financial companies listed on the NASDAQ stock market, determined by market capitalization. It's not just any stock market index, but an exclusive club showcasing tech titans like Apple and Amazon. This index is steeped in tech, reflecting not just the market, but the future as the tech sector envisions. It serves as a benchmark for investors, helping compare portfolio performance against a standard representation of the U.S. tech-heavy equity market. It underpins the creation of investment products that track the index, providing added exposure to tech. However, caution is advised. Its tech-heavy composition can cause more market volatility. Highs can be dizzying, lows can be steep. Because of its tech dominance, the NASDAQ 100 can be more volatile than other indices. In conclusion, exchange-traded funds, or ETFs, are a potential cost-effective choice for investors seeking portfolio diversification. They are financial instruments that provide access to a diverse range of assets such as stocks, bonds, commodities, and more. They offer flexibility and have gained popularity among investors at all stages. A significant part of ETFs is their ability to track market indices like the S&P 500 and NASDAQ 100. These indices are comprised of the largest companies listed on the stock market and often serve as market performance yardsticks. Yet, it's crucial to remember that each individual is accountable for their own financial choices. Investing in ETFs, as with any investment, carries its own risks and benefits. While this video aims to give a comprehensive understanding of ETFs, it's not a substitute for investment advice. Always conduct your own research or seek advice from a financial advisor before making any investment decisions.